My name is Niyi, and I'm an investor-friendly realtor based in Atlanta, Georgia, that was able to quit his W-2 in medical device sales at a Fortune 500 company and move into full-time real estate entrepreneur after a less than 8-year career. Now, you may be asking, how did I do this? And what were the main key metrics to allow this to happen? Well, it's what I like to call financial freedom through real estate investing and real estate in general. When you look at investing across the globe, there's a couple pieces and a couple areas that people really flock to. One is the stock market, the other is real estate. And so when I, back in 2015, was trying to find which investment vehicle I wanted to go into for the long term, I researched and read a bunch of books on the stock market and tried to figure out, how do you pick the best stocks? How do you know what companies are going to be great? And how long does it take to build wealth? And I also did the same. I listened to podcasts and read books on the real estate market and how you could maximize that. What I found is that in many ways, real estate won out, and it was a lot more achievable for the great 90% than it is for the stock investing, at least getting started until you build your wealth and portfolio. And so a couple of the reasons that I believe in financial freedom through real estate are really, there's four main ones. One is the cash flow. When you look at buying stocks, right? I'm going to compare this to stocks. Stocks give out dividends, but those dividends are pretty minimal unless you own a significant portion of stocks. And those dividends are not guaranteed. That company can control whether or not they want to give a dividend, and it's out of your control what direction that company goes in the future. Like when you look at some companies that have gone out of business, right? When you look at the blockbusters of the world, when Netflix came around, that company had to shut down, right? And so there's a lot of different companies that will get put out just by new technologies coming into place or not keeping up, and you don't have a control over that. And so when you look at cash flow from a real estate perspective, one, it's a lot more predictable. You can run numbers on neighborhoods and run analytics to figure out how much would this rent for, and you can update that unit to get it to rent for more. You can upgrade the class of tenant. You can buy in a great neighborhood where rents are going to appreciate, and you can get paid to own this investment. So this is one of the unique investments where you can actually get paid all along the way, as opposed to, hey, only when you sell that stock or sell that investment. The other piece with real estate that I love is the appreciation, right? If you buy in the right neighborhoods, real estate tends to move up and right at an alarmingly fast rate across the spectrum. When you look at even 30 years ago and maybe, hey, what did your parents buy their homes for? It was probably less than 100K. Now, looking even across the US, to buy a home for less than 100K would be very difficult. The median price of a home across the US is right around that 399 range. And so you're looking at 400K, or 4 times the cost of what it would have cost 30 years ago. And so when you focus on that piece, that appreciation over time with the real estate is that kicker on the back end, along with the cash flow. The other piece that's hugely important in my decision to go into full-time real estate, and why I coach and preach financial freedom through real estate, is tax benefits, right? When I left my W-2, I knew that, hey, the first 2 years, I may not make as much as I was making with the W-2 on paper, right? But with the W-2, they're taking taxes up front. I was in a high tax bracket, and so I would lose 37 to sometimes 50% of what I was making, depending on if it was a commission check or things of that nature, to taxes right off the bat. Whereas with real estate, because it is more passive income and it's an actual asset, there's many ways that you can offset some of those taxes, i.e. through a cost segregation study where they completely lower your taxes. You can do a 1031 exchange when you sell the house to where you move those taxes elsewhere. If it's a personal property that you lived in for 2 of the last 5 years, you can sell it and take up to $250,000 as a single person, or $500,000 as a married couple in non-taxable income from the profit on that property. There's a lot of different things built into the tax code that help you. And so the more real estate you own, the more benefits you have from a tax perspective. And that's why you can hear individuals that are controversial, the Robert Kiyosaki's of the world, say, hey, I don't pay any taxes each year. It's due to some of the tax benefits that you can use. And the other piece I mentioned with those tax benefits was depreciation. The fact that the government knows, hey, a home over time, you're going to have to pay to maintain it. And so they not only allow you to write off the cost of supplies and things of that nature to maintain a rental home, but also they allow you to depreciate that home and take it off of your taxes each year, or you can accelerate that depreciation. And so when you talk about financial freedom, in my mind, financial freedom and real estate go hand in hand, just like if you wanted to get in shape and have an iron rock body, then going to the gym and working out goes hand in hand with that piece, and your diet goes hand in hand. And so I'm a huge proponent of real estate. It's helped me achieve financial freedom in a short amount of time. I can tell you that it was not my goal to leave the W 2 this early, right? It was just a blessing that came from consistently investing. Back in 2015, I knew nothing. I started reading a bunch of books. I listened to podcasts. I came across the Bigger Pockets podcast, which truly inspired me to start taking action. And the first deal that I bought was actually lowering my cost of living. It was a house hack. I went from living in $1,100 condo that was amazing, right? It was in Louisville, Kentucky. I was there for work, and I went from paying $1,100 to live there to buying a triplex where the mortgage was $1,400. I lived in one unit, rented the other two out for $750 a piece, and I essentially lived for free. And so I went from paying 1,100 to now I'm making 1,100, and I own an asset. And fast forward 4 years on that property alone, the rents went from 2,200 when I moved out to 2,850 when I sold it, and the property had appreciated from 190, which I bought it for back in 2016, to 310,000. So I walked away with a six-figure check on a property that was appreciating the whole way, and was able to flip that money into more property that I own today. And so if you stay consistent in this game and you start off with something as simple as even just a house hack, right? Just 5% down, 3.5% down on a small multifamily or a single family with an in-law suite, it's crazy what you can achieve in a couple years.